Hello and welcome back to The Note. Let's take a look at where true long-term value is to be found today. Now, there's an interesting argument that you could find that in agricultural stocks, thanks to the ongoing problems of climate change, or perhaps in terms to which we're more accustomed, thanks to central banks, there could yet still be more value to be found in the US or in the Japanese equity markets. Those at least are some of the contentions of my guest today. He's the Chief Investment Officer of Baring Asset Management here in London, Marino Valensise. Marino, thank you very much for joining me today. Now, let's start by taking a look at a chart you produced on European equities and earnings growth in Europe. It seems many people are very interested and very excited about Europe at the moment. There's lots of flows in there. Judging by this chart, your Baring is rather less excited by this.
Well, I think if you go around and talk to institutional investors around the world, you'll see that there is a lot of interest in the European economy and in European investments. Yeah. But we have seen that in the last few quarters, really, there has been a dramatic rally in asset prices, which has not been matched by earnings growth.
Right,
and you can
exactly.
see from this chart, earnings have barely changed.
So what kind of earnings growth is being implicitly required at the moment to justify the kind of valuations we're looking at?
Consensus says that for next year we should be expecting about 13% earnings growth, which is extremely ambitious. Particularly
when people are worried about potential deflation in the Eurozone.
And particularly in an economy where there is very little growth in the money aggregates and in bank lending.
Okay, so that suggests us that we're going to go against the herd and against Europe. Now let's take a look at the same exercise for the US. And this chart also suggests that American markets and valuations have got ahead of themselves by comparison with underlying earnings. But you're, as I understand it, more optimistic on the States. Is that right?
Yes, and I think this is happening for a reason. As you can see here, earnings kept on growing. Bank lending is quite healthy in the States. There are other elements which should make us very optimistic about that. The energy independence, a lot of natural gas onshore, a real estate market which has recovered very well, and consumer confidence which has come back. So I'm a little bit less worried about the US, which I see as still an opportunity, while Europe remains probably more problematic.
How much of that depends on the Fed? We've heard from Janet Yellen, who has sort of basically reassured everybody that the spigot is going to carry on for a while. Is this really only a play on the Fed, or is there more to it than that?
Well, I think if you have a look at the two markets that we prefer, on the equity side, there are the US and Japan, two markets where the monetary authorities have been, and in one case will continue to be, very generous with the market. So I'm afraid, we need money to go around, we need bank lending, and this happens to be the case in Japan and in the US.
Okay, let's take a look at your recommended strategic portfolio over the next 10 years. So again, this is very intriguing. After quite such a run-up as we've had, you've still got a very, very healthy weighting in US equities. In international equities, we've grasped that you're confident about Japan, but not about Europe. What about emerging markets? Only people perceive them as cheap at the moment. Where would you weight emerging markets?
Well, emerging markets are going through a very difficult phase. There are issues at the time where the central banks and the Fed is withdrawing money from the system through the taper. Some of the emerging markets are going to find it quite difficult to borrow. There are fewer investors who are willing to lend to some of these countries. There are, however, within emerging markets, some countries with solid fundamentals, and I would point in the direction of North Asia, particularly Korea and Taiwan, which are two economies and two countries more linked into the global trade. If US consumers buy anything, a smartphone or piece of electronics, there is probably something manufactured in Korea or in Taiwan.
Okay, so those are the two countries which many people think have actually already emerged of the emerging markets. My final question, let's talk about agriculture very briefly. The argument for it is clear. It hasn't worked very well in the last few years. What is the case, or how do you expose yourself to the possibilities of growth in agriculture?
Well, I think this is a strategic long-term theme. The ice at the North Pole is melting. There is going to be a more unpredictable weather in the Northern Hemisphere. This should lead to corn, soybean and wheat to gain in price. It hasn't happened so far. The dynamics in agricultural stocks has been somewhat disappointing, but I think that for long-term investors this is a very, very interesting investment theme.
Okay, Marino, thank you very much indeed. So there are some things to trust in for the long term: the Bank of Japan, Federal Reserve and global warming.